Hello everyone, my name is Madhur Rajput and I'm going to teach operations of banking in today's session. So today's topic is banking operations. This is a part of the chapter Money and Credit Class 10th NCERT Economics. So in this section we will be studying how a bank operates. See, bank has two things, its assets and its liabilities. Assets and liabilities. What are the assets and what are the liabilities for banks? Liabilities are the responsibilities of the bank that it has to pay, and assets are the things that are valuable for a bank. So, what will be the asset for a bank? It will be its loans. And what will be the liabilities of a bank? It will be the deposits of a bank, the deposits that the customers do make in their respective bank. So it will be the liabilities and the loan will be the assets. We will be discussing how they are like this, how a loan is an asset and how the deposits are liabilities. But before going towards that, we need to understand there are few types of deposits as well. Like there are time deposits and there are demand deposits. Time deposits means that there is a time associated with the maturity. You have to wait for a particular period, and after that period, when your deposit is matured, you can withdraw your amount. And second one is demand deposit, in which you can demand your deposited amount whenever you want. Okay, so example of demand deposit is CASA. CASA means current account and savings account. And time deposit examples are FD and RD, fixed deposit and recurring deposits, in which you have to deposit a certain sum of money and you have to wait for a particular period of time, and after that period is passed, the sum is matured, you can withdraw your money. And in demand deposits, as the name suggests, you can withdraw your money whenever you want. Okay, so current account and savings account is the example of demand deposit. Fixed deposit and recurring deposit is the example of time deposits. So these are the kind of deposits. Loan can be of various types like home loan, education loan, business loan, vehicle loan. There are different kinds of loan for a bank that it provides to its customers. Now we will be discussing how these things are uh, assets and liabilities for a bank. Let's move forward. Suppose this is a bank. It give loan to its customers, and some customers deposits some amount of money. The rate of interest that a bank charges on its loan will be always higher. Suppose if a person has a deposit of 1 lakh rupee in the bank, uh, I'm sorry, suppose a person gets a loan for 1 lakh rupees from a bank at the rate of interest 10% per annum. So after a year, he will be paying 1 lakh 10,000 to the bank. All right. And the deposits, if a person has made a deposit of 1 lakh in the bank, so bank will provide less percentage of rate of interest at the deposit. It will be around 5% per annum. This is just an example. So when the person comes at the time of maturity of his deposit, the bank will provide him, after maturity, the bank will provide him 1 lakh 5,000 rupees. Okay, so now we can see that the bank earns the rate of interest. What will be the rate of interest if we subtract 1 lakh from 1 lakh 10,000? It will be 10,000 rupees. it will be 10,000 rupees. And the amount that the bank has given to its customer, if we subtract 1 lakh from 1 lakh 5,000, it will be 5,000 rupees. So we can see that the earning of the bank is more than its expenditure. The bank is providing its customer 5,000 rupees and charging 10,000 rupees from the person who has taken a loan from the bank. So this difference between the earning and expenditure, if we subtract 5,000 from 10,000, it will give us 5,000 rupees. So this 5,000 rupees will be used for the expenses of banks, like it will give salary to its employees, it will look after the maintenance costs like the electricity and everything. Suppose just to make it a real life example, we will just add crores behind these figures. Suppose if the bank has loans for 1 lakh crore and the deposits of 1 lakh crore, so it will be earning 10,000 crores from its loan, and it will be providing deposits, interest on deposits of 5,000 crores, and the savings of the bank will be 5,000 crores, and in this 5,000 crore rupees, it will be maintaining its all expenses. So this is how a bank operates. This is all about your deposits, your types of deposits, like we have time deposit, demand deposit. FD, RD are the examples of time deposits, current account, savings account for demand deposits, different types of loans, and how a bank works, how a bank earns profit, and how a bank look after its operations. So thank you for watching this lecture.